Hello and welcome to the Friday market update. Well, tick tock. So mortgage rates stayed just under 7% this week. And while we were hoping for more improvement, the dreaded, I hate it, the Bureau of Labor Statistics, BLS jobs report came in hotter than expected. Surprise, surprise. So when rates jump back up a little bit, the Fed, they're just sitting and waiting. They're in full wait and see mode, trying to figure out whether the tariffs will spike inflation, if the economy will slow down, if layoffs will pick up, or if the consumer will just stop spending. So far, the data isn't showing inflation, so the Fed is content to wait, and they wait, and they wait. We're going to be in a waiting mode, I think, for a while. The problem, the Fed wants data, but the data is lagging. It comes from last month, 2 months before. We're living in real time right now, and real-time reactions are really what we need. And I think we're in a slowdown. I think they could easily lower rates, but they're going to wait. So speaking of real time, can the BLS please get real? This report has been an absolute thorn in the side of the housing and mortgage markets for months. It just kills me every time it comes out. Why? Because the accuracy is so suspect. It's questionable. And yet Wall Street still trades on it like it's gospel. So today's BLS job report showed 139,000 new jobs in May, actually surpassing the 130,000 that were expected. But then, surprise, they decided to revise the March number and the April numbers down by 95,000 jobs. Whoops, our bad. But meanwhile, ADP's private payroll report that came out earlier this week showed only 37,000 jobs versus the BLS report. And get this, the BLS actually runs two different surveys. They run a business survey and they run a household survey. And the household survey, guess what? Showed job losses of $696,000, 696,000 jobs. So that's an 800,000 job gap between the two reports. And to make things even more absurd, we're losing full-time jobs and gaining part-time jobs. So I don't think the economy is quite as strong as everybody's thinking, nor the Fed. So guess which survey the media covers? You got it. The one with the better headline, which is the business survey. So the BLS has even admitted there's guesswork involved. They're understaffed and they just can't get all the numbers right. So every time, though, these headline reports come out, it makes the mortgage-backed securities tank and interest rates go up. There's my rant for the day. In my opinion, we should already be under 6.5%. But I think it's going to happen really close. Now, here's the good news. We think it has to do with mortgage spreads. That's the difference between the 10-year Treasury yield and mortgage rates. And historically, the spread has been around 1.8% to 2%. So in other words, the mortgage rate is generally 2% above the 10-year Treasury. Right now, that would put us right around 6.5%. And now, but the current spread is 2.5%. I know I'm getting a little bit crazy here, but that's part of why rates feel extra high. So there's a bank deregulation that's going on. And if this package passes, and it's looking pretty good right now, it could narrow that spread, bringing mortgage rates down by about 0.5%, even without any major changes in the economy. That would put us under that 6.5% level and get things moving again. We saw a lot of activity at 6.5%. So now, are we entering a buyer's market? If you're seeing more price drops, longer days on the market, and buyers taking their time, you're not imagining it. Inventory is definitely building and the leverage is shifting. But the real question is, do you know how to win in this kind of a market? What is a buyer's market? Let's talk about that. A true buyer's market happens when the housing supply outpaces demand. Pretty simple. Key indicators include inventory of over 6 months of housing inventory. I believe we are in a transitional market with 4 to 5 months of inventory. Some listings are sitting a little longer than you would like, and the seller doesn't like it sitting that long as well. So we are seeing homes sitting longer, fewer bidding wars, more seller concessions. I'm seeing that all over the place. Buyers are gaining leverage finally, and the sellers need a strategy to stand out. That's where your skills as an agent matter more than ever. So why does this matter right now? So many agents only know how to sell in a hot market. They know how to help a buyer win bidding wars, but when the market shifts, you need to show the buyers why they should buy now. What's the purpose? Why should they buy? And you need to know how to move a listing that isn't selling itself. So that's why, guess what? We're bringing in the GOAT himself of real estate coaching, Mike Ferry, for a game-changing seminar on Friday, next Friday, June 13th, 9 a.m. to 12 p.m. Mike has coached thousands of top producers through shifting markets. At this session, he'll show you exactly how to position your listings to stand out, handle price objections with confidence, get homes sold while others sit on the market, and don't miss out. If you're serious about mastering today's market, you need to be there Friday, June 13th, 9 a.m. to 12 p.m. Register at billgaylord.com/ferry or go to my website, billgaylord.com. So bonus for you today, sell like the builder. One of the biggest pain points for today's buyer is, guess what? The monthly mortgage payment. Builders know that, and they hit it head on. They offer rate buy downs and other incentives to address it. You can do the same with your listings. Our Sell Like the Builder program shows you how. So if you want to learn more about it, call me. I'll walk you through it. It's a great program, benefits you, the seller, and everybody involved, including the buyer. So be the Buffalo, learn the skills to pay your bills, and get your listing sold. We'll see you next Friday. This is Gaylord out. Have a great weekend. Bye-bye.